Hello. Today, let's learn something about a basic concept of accounting called journal entries. Journal entries is the entry which is made initially in the books of accounts. It is also called the book of original entry because the first entry is made in that book. Now, let us see the rules of these journal entries and accounts that are involved and how to pass these entries in the respective books of accounts. Let us look at some of the basic elements in accounting. As I said, those problems are based on the three rules on the accounts that are involved. The three accounts are personal account, nominal account, and real account. Now, what is personal account? Personal account deals with any account that is with a person like you and me, or an artificial person like a bank or a corporation. The next account would be real account. The real account deals with the things that you can see, touch, and feel. For example, furniture, vehicle, building. These are considered real account. Finally, you have something called as nominal account. Now, nominal account deals with all your incomes and gains, expenses and losses. Any sort of income and gain will be treated as a nominal account. Similarly, expenses and losses too will be classified under nominal account. Now, let us look at the rules of these accounts. The first one here is personal account. The personal account states debit the receiver, credit the giver. The person who receives the money should be debited, and the person who pays the money should be credited. For example, you go and pay bank 10,000 rupees from your cash. The bank is receiving the money and you are paying into the bank. Ideally, the journal entry for this is bank account debit to cash account, because bank is receiving. Since cash is a real account, something that you can touch, feel, and see, credit that goes out. So bank account debit to the cash account. Another example I could give for real account is when you purchase a machinery. Now, machinery is an asset. The rule of real account states debit that comes in, credit that goes out. When you buy machinery for cash, the machinery comes in. So you need to debit the machinery account. You're paying cash for that. Cash is going out. So you need to credit. Machinery account debit to cash account. That would be an example of real account. Coming to nominal account, this deals with, as I said, expenses, losses, incomes, gains. It could be like discount, commission, etc. If you are receiving discount, it's a gain for you. Usually you receive discount in the form of cash discount. So when you're receiving discount, you should credit that discount received account. Similarly, if you're allowing discount to somebody else, you should debit it because it's a loss for you. So debit all expenses and losses. That would apply for the nominal account rule. Let us look at the first of our problems today. Here, this shows a series of transactions that happens in a company between 1st and 15th of this month, January. This ideally has transactions dealing with cash, purchase with cash, you deposit into bank, you bought goods and credit. So let us go about knowing how to pass the journal entries based on the rules that we applied or followed earlier. Let us see the journal entries that need to be passed for the first 15 days for this organization. The first transaction that happens is introduction of cash into business. So when you're introducing cash into business, it is termed as capital. It's the amount that you're investing. You need to identify the accounts that are included or involved in this transaction. When you invest, the cash is coming in, and that is treated as a capital. Cash account is a real account. That is something you can touch, feel, and see. The rule of real account says debit that comes in. So you debit cash account. It is coming in the form of capital. That's an investment. Capital should always be credited. So the amount here would be 20,000. The debit column should always match the credit column because you follow dual aspect of accounting. LF, ledger folio, that is the page number of the ledger that you need to refer to for this particular account. Each of these accounts will have a ledger. Now, ledger is nothing but an account for any of these accounts. It's a separate account that's open that you can see all the transactions that happen with respect to each of these accounts. Let us come to the ledger transaction or ledger posting the next session. But for now, this is how you post a journal. Identify the accounts, apply the rules, and post them. Debit, credit should always be the same. The next transaction says you're depositing cash into bank. Now, the two accounts that are involved in this transaction are cash and bank. If you remember the rule of the real account, both of these are real accounts. Debit that goes out, debit that comes in, credit that goes out. That is the rule of the real account. Cash is going out. So you need to credit. And bank is receiving. Bank could also be treated as a personal account. Please remember, bank is both a real account as well as a personal account. You can treat it either way. So the rule of the personal account would be debit the receiver. The bank is receiving cash, so you need to debit the bank and credit the cash. This amount would be 10,000. And in the narration, you could write cash deposit into bank. This would end the second journal entry. The next transaction is a credit purchase of rupees 5,000 rupees from Ramesh and company. The name of the person is given because it's a credit transaction. You don't pay the amount right away. You will be paying it on a later date. So you need to remember that the name of the person is applicable only if it is a credit transaction, be it purchases or sales. For this transaction, you need to debit purchases account. Purchases is nothing but goods. There is no goods account in accounts. It's either what you do with the goods that matters. Either you sell or purchase. In this case, you're purchasing. Goods are coming in. Debit that comes in. Goods are coming in form of purchases. So debit purchases account, the amount is 5,000. And credit Ramesh and company, because Ramesh and company is the person who is giving you or selling you the goods. You need to pay them. You have not yet paid. It's a credit purchase. You have received the goods. That is why you need to debit purchases and credit Ramesh and Co. That signifies that you are yet to pay them. The amount would be 5,000. And in the narration being credit purchase. The next transaction is just the opposite of the previous one. Here you had a credit purchase. This would be credit sale. You are selling goods to Rajesh and company on credit. You give away the goods, but he has not paid you the money yet. So in this case, you need to debit that person. That means he has received the goods, he has not paid. And credit sales. Why do you credit sales? Because sales is in the form of goods, right? Goods are going out. It's a real account. Credit that goes out. So you need to credit sales and debit Rajesh and company. And in the narration, you can just write being credit sales, and that's being done to Rajesh and company. The amount here would be 4,000. The next transaction is similar to the one that you saw earlier. Here you purchase goods from Amesh. This would be from Ramchand. It is exactly the same. When you purchase, goods are coming in the form of purchase, and he is giving you, Ramchand is giving you on credit. You need to pay him. So apply the rule of real account, debit that comes in. So purchase account debit to the person you need to pay. Here the amount would be 6,000. And in the narration, you can just write being credit purchase. This would explain this transaction. So this is how you pass the journal entries based on the accounts that are involved. You apply the rules that were explained and you post them in journal. This is the first step. From this, you post them into ledger account. Ledger account is called the book of final entry. Now let us see how that goes the next session. In the next problem, we'll see how you post these journal transactions into the respective ledger accounts. Which this will end this session. Thank you for watching.